Welcome to the deep dive. Today, we're getting into a really fascinating mix of sources you sent over. We're talking centuries of thought here, individual liberty, government's role, right up to today's investment scene.
Yeah, it's quite the collection.
We've got parts of the Gloom, Boom, and Doom report from December 2022, which is still incredibly relevant. And it's not just modern analysis, it weaves in wisdom from figures like Thomas Paine, Benjamin Franklin.
Alongside current takes on global markets, what's happening in Brazil, even charitable giving, it connects the dots.
Exactly. So our mission really is to unpack all this, pull out the key insights that help us understand, the challenges and opportunities both way back then and right now.
And what strikes me immediately is how these historical ideas about freedom and government, they really echo in the economic discussions happening today. It shows these debates aren't new.
Absolutely. And speaking of historical ideas, where better to start than Thomas Paine and common sense?
A real fire starter, that pamphlet.
Right. Not just some dry political text. This thing lit a fuse. And his background, I mean, from corset maker's son to a tax officer who got fired twice, then bam, this hugely influential writer.
Arriving in America just as things were boiling over.
Yeah, you had the Stamp Act, the Townsend Acts, the colonies pushing against that proclamation line. The tension was palpable.
And Paine just tapped right into it, didn't he? He landed in Philadelphia. Franklin had encouraged him. And he just articulated what many were feeling, but maybe couldn't quite express.
Gave it a voice. Common sense wasn't just persuasive, it reached a massive audience. It shifted minds.
Okay, so let's break down some of those core arguments. He starts with this really sharp distinction between society and government.
Yeah, that famous line, government, even in its best state, is but a necessary evil. In its worst state, an intolerable one. Powerful stuff.
He saw society as like this natural positive force, people coming together. Government, on the other hand, even a good one, is basically just there to stop us from being our worst selves. A necessary restraint, but still a restraint.
Almost a libertarian view, isn't it? Minimize the government, let society flourish.
Very much so. Use government sparingly, that was the idea.
And then he goes straight for the jugular monarchy, hereditary succession. I mean, that was radical.
Truly. Saying it out loud like that.
And using the Bible to do it, referencing 1 Samuel 8, where Samuel warns the Israelites about wanting a king, basically dismantling the divine right of kings using scripture. He called the whole idea of ruling by birth absurd.
Which was clever, because in that deeply religious society, using biblical arguments against the king's authority, well, that hit home. It chipped away at the monarchy's legitimacy for ordinary people.
Right. But Paine wasn't just tearing things down. He was building a vision, too. An independent America, a continental charter.
What did that promise?
Things like freedom and property to all men and the free exercise of religion. He was actually pretty optimistic about America's chances, even militarily. Maybe surprisingly so.
That optimism was key, though. It helped people imagine a future, a prosperous America free from British rule. It rallied support.
And the numbers show it. Common Sense sold what? Something like 100,000 copies in 3 months?
Incredible reach for the time, in a population of maybe 2 million.
It really poured fuel on the fire for republicanism, for independence. But not everyone was cheering, were they?
Oh, definitely not. You had loyalists pushing back hard. James Chalmers wrote Plain Truth, arguing that ditching the king would lead to chaos, to this scary thing called democracy.
Democracy was a dirty word to some back then.
It was. And even some revolutionaries like John Adams thought Paine went too far, too radically democratic. Adams worried about, checks and balances or the lack thereof in Paine's vision.
So even among those wanting independence, there wasn't just one idea of what the new country should look like. Lots of different viewpoints.
Exactly. It was a real melting pot of political philosophies. Paine's ideas sparked intense debate about the very nature of the republic they were trying to create.
Which brings us nicely to some other heavy hitters from that era, also quoted in your sources. Benjamin Franklin, for instance.
Ah, yes, Franklin.
He stressed that only a virtuous people are capable of freedom. And he was big on protecting free speech. It suggests they knew liberty wasn't automatic. It needed, well, a certain kind of citizen.
That link Franklin draws between virtue, sort of moral character, and freedom is fundamental. Self-government needs responsible people. And his point on free speech, well, that's timeless, isn't it? Essential for finding truth.
Then you get Alexander Hamilton, and this quote feels almost spooky, warning about demagogues who ride the storm and direct the whirlwind. Sounds familiar somehow.
Hamilton was always a bit more, let's say, cautious about pure popular sentiment. He
Uh,
worried about charismatic leaders manipulating people. It's a warning that echoes through history.
James Madison had similar concerns, didn't he? About how tools used for defense against outsiders could end up being used for tyranny inside the country.
Right. He saw the danger. Yeah. Protecting the nation is vital, but you have to watch that the methods don't erode freedom at home. It's a constant balancing act.
And Thomas Jefferson, always wary of concentrated power, warning about an aristocracy of our moneyed corporations challenging the government itself, that feels incredibly current.
Jefferson, with his sort of agrarian ideal, really distrusted big finance and concentrated economic power. He feared it would corrupt the republic.
And finally, Washington's farewell addressed that advice to steer clear of permanent alliances, a cornerstone of U.S. foreign policy debates for centuries.
Washington wanted the young nation to focus inward, to avoid getting tangled in Europe's complex politics, build itself up first.
Okay, so we've got this backdrop of foundational ideas, liberty, government, virtue. Now, let's shift gears, as you said, into the more modern economic analysis in that gloom, boom, and doom report from late 22.
Right. The report came out observing some market bounces after big drops, but also this lingering feeling of pessimism, a lot of bearish sentiment around.
It captures that moment, doesn't it? Inflation was high, the Fed was starting to hike rates, economic anxiety was definitely in the air.
Yeah, a useful snapshot.
And then the report connects this to G.K. Chesterton. I loved this quote. Society declines when common sense really becomes uncommon.
That's a great line.
It was used to talk about market craziness, right? Speculative bubbles, ignoring fundamentals, and how eventually reality bites back despite interventions. The report points to Sam Bankman-Fried's FTX collapse as a perfect example of financial delusion.
Chesterton nails it. Even in complex markets, if you stray too far from basic economic sense, things can get unstable fast. FTX was a brutal lesson in that.
Okay, now here's a twist. The report includes this essay called The Great Constitution Myth, and it basically pushes back against the standard story of why the U.S. Constitution was adopted.
Ah, yes, this part. It challenges the whole idea that the Articles of Confederation were this complete disaster, this crisis that forced the creation of the Constitution.
It's a really different take. Makes you rethink the standard narrative. Let's unpack its arguments.
Definitely worth digging into. It questions the inevitability of the Constitution.
Okay, so first, the essay argues the Articles did have a way to fund the government. Article 8 said states had to contribute. The fight, it claims, wasn't about no funding mechanism, but how to calculate contributions' land value versus population. A practical squabble, not a fatal flaw.
So the argument is maybe the Articles weren't inherently powerless on tax, just that getting states to agree and pay up was the hard part. Practical politics, not necessarily a broken system.
The essay also says the U.S. could get foreign loans under the Articles, especially from the Dutch, and that British trade sanctions weren't actually crippling. This undermines the story of a government about to collapse financially.
Right, it paints a picture of a nation perhaps struggling, but not necessarily bankrupt or isolated. It chips away at that desperate times required desperate measures justification for the Constitution.
And then there's interstate commerce. The essay says states were already starting to sort out trade issues themselves. It points to things like the Mount Vernon Compact between Virginia and Maryland and the Annapolis Convention,
Suggesting that maybe cooperation and amendments to the Articles could have worked, rather than a total rewrite, a more evolutionary approach.
What about Shays' Rebellion? That's always painted as the final straw, proving the Articles were too weak.
Well, this essay reframes it. Says it was mostly a Massachusetts tax revolt, a state issue, not proof federal government was failing. And it compares it to the Whiskey Rebellion, which happened under the stronger Constitution, implying, a strong central government doesn't automatically stop unrest.
That's a really interesting comparison. It challenges the neat narrative.
It does. It questions whether Shays' Rebellion was really the catalyst everyone makes it out to be.
The essay even uses the phrase bait and switch, suggesting the Constitutional Convention was supposed to just revise the Articles, but the delegates, well, they went way further and created a whole new government.
Implying maybe the framers exceeded their mandate, driven by a desire for a much stronger central government than originally intended.
And the conclusion is maybe the powers given to the new federal government were too much. That perhaps key powers could have just been added as amendments to the Articles, keeping more power with the states.
It raises that fundamental question about the balance of power, doesn't it? State versus federal. A debate that's never really gone away.
Which flows right into the essay's view on the Federalist agenda. It focuses on Alexander Hamilton pushing hard for centralization, a national bank, protectionist trade policies, even admiring French economic models like Colbert's.
So it wasn't just about structure, but a specific economic vision, too. A more managed, centralized economy.
And contrasting that with Jefferson's fears of a rising financial class that moneyed aristocracy. So deep ideological divides right from the start about what kind of economy America should have.
Absolutely. The essay argues the Federalists had a clear economic plan, and it wasn't the only vision on the table. Hamilton versus Jefferson really captures that core tension.
Okay, fascinating historical detour there. Let's pivot back to the markets in late 2022, based on the gloom, boom, and doom report's observations then.
Right, so back to the more immediate economic picture.
The report noted really high options trading volume. They saw this as a sign of speculation still running hot, even though the Fed was tightening, raising rates.
Yeah, it shows how monetary policy changes don't always bite immediately. There was still this risk appetite, a lot of short-term trading happening, old habits die hard maybe.
It also mentioned this divergence. On the one hand, you had the G5 credit impulse turning negative, suggesting less credit creation in big economies, tightening liquidity.
Which usually signals a slowdown.
But on the other hand, there still seemed to be enough liquidity floating around to fuel that speculation. Kind of a confusing signal.
It could have been leftover money from earlier stimulus, or maybe fiscal spending still propping things up. Not a clear-cut picture.
The report also talked about the potential for inflation, consumer price inflation, to start coming down because demand was weakening. High prices eventually made people buy less.
The classic demand destruction argument. Eventually, high prices curb spending, which eases price pressures. And we have seen some of that play out since late 22.
It also looked at the Fed. Historically, the Fed cuts rates during recessions. But the report noted that back then, with rates still relatively low compared to history, the Fed might not have had much room to cut aggressively if a recession hit.
Right, less ammunition than usual. A potential problem if the economy really tanked.
And they pointed to signs of that demand weakening, falling manufacturing orders, really negative consumer sentiment surveys, those classic leading indicators of a slowdown.
Yeah, tangible signs that the economy was likely cooling off.
Then there's the impact of falling asset prices. Cryptocurrencies were getting hammered, FTX being the poster child. The report suggested this wealth destruction could actually help curb inflation.
Makes sense. If people feel poorer because their crypto portfolio or stocks tanked, they spend less. That's the negative wealth effect, and it could definitely dampen demand and inflation.
The report also floated the idea of the US dollar potentially weakening, which could make emerging markets look relatively more attractive for investment.
That's a common theme. If the U.S. economy looks shaky or interest rate gaps narrow, money can flow out of the dollar towards places with maybe better growth prospects or cheaper assets.
And it wasn't just theory. The report gave specific ideas. Brazil, Argentina, Hong Kong equities were mentioned. And it noted Vietnam and Turkey had surprisingly strong runs in 2022.
Shows a global perspective, looking beyond just the U.S. and Europe. And yeah, markets like Vietnam and Turkey sometimes surprise everyone. Always humbling.
Lastly, on investments, it mentioned precious metals, gold, silver. The idea being that in a recession, especially with a weaker dollar, these might do well. The old safe haven play.
Classic hedge. When economic uncertainty rises or faith in currencies wavers, investors often turn to gold and silver.
Okay, now let's zoom in on Brazil. The report has this detailed analysis, drawing on insights from Pat McKim, who really knows the country.
Yeah, McKim's perspective is invaluable. Ground-level view.
He starts with the historical context. Brazil's ongoing battles with inflation, corruption, often tied to those boom and bust cycles in commodity prices.
Understanding that history is key. These aren't new problems for Brazil. They're kind of baked into the system, unfortunately, often linked to commodities.
McKim gives a quick rundown of presidents since the dictatorship ended in '85. He highlights Fernando Henrique Cardoso, FHC, and his big success with the Plano Real, finally taming hyperinflation.
That was huge for Brazil. Stabilizing the currency was absolutely transformative, setting the stage for real growth.
Then he contrasts that with Lula's first terms and Dilma Rousseff's presidency. Big commodity boom then, right? But also massive corruption. Lava Jato, the car wash scandal.
Right, a period of immense opportunity fueled by commodities, but also undermined by systemic corruption.
And he uses the story of Ike Batista, the billionaire, who rose spectacularly and then crashed and burned as a kind of symbol of the excesses of that time.
A very vivid example of that whole boom-bust cycle and the dangers of debt-fueled ambition tied to commodity prices. A real cautionary tale.
Then came Bolsonaro, the election, his conservative policies, the controversies, setting up that incredibly tight 2022 election where Lula just barely won.
Super close race. The report mentions that if Brazil had an electoral college like the U.S., Bolsonaro might have actually won based on geographic support.
Wow, that really makes you think about how electoral rules shape outcomes.
Definitely shows the regional splits and the polarization in the country.
But despite all the historical baggage and the tight election, McKim offers what sounds like, well, cautious optimism for Lula's current term.
Cautious is the key word.
He points to a few things. Lula's older now, maybe less radical. There's a strong opposition in Congress to check him. Law enforcement is stronger post-Lava Jato, and Lula knows he needs investor confidence.
So the argument is there are more constraints on Lula this time around. Checks and balances, both political and institutional, might moderate his policies.
Plus, Brazil's underlying strengths. Huge commodity producer and increasingly energy independent because of those big pre-sal oil discoveries.
That energy independence is a major strategic asset, especially now. And being a commodity powerhouse always gives Brazil leverage, depending on global prices.
The report also suggested Brazil might actually have inflation better handled than some other big economies at that point, a big change from its past.
Yeah, Brazil's central bank moved pretty aggressively on interest rates in 2022, and it seemed to be working better than in some other places. Shows a commitment to stability.
And one last interesting point. Historically, the main Brazil ETF, EWZ, actually did really well during Lula's first presidency, hinting maybe at potential upside again.
It's an interesting historical correlation. Of course, past performance is no guarantee, as they say, but it's a data point investors would certainly look at.
Okay, nearly there. The report finishes with something different, a quick look at some charitable projects the author supports.
Right, nice touch.
Things like Caravan to Class for Education in Mali, Proyecto Mirador, building smoke-free stoves in Honduras, Child's Dream Foundation in Southeast Asia, and even a local food project in Chiang Mai, Thailand.
It's a good reminder, isn't it? Amidst all the economics and politics, there's philanthropy, direct action, trying to make a difference, puts things in perspective.
So let's try and wrap this up. What a journey from Thomas Paine and the roots of American liberty to questioning the Constitution's origin story, analyzing market jitters in 22, and then this deep dive into Brazil's complexities.
It really covers a lot of ground. You see these threads, right? Paine's questions about government power versus individual rights, they're still relevant when we talk about constitutions or economic policy today.
And that look back at the Articles of Confederation, it gives you a different lens for thinking about how governance evolves, the trade-offs involved.
Definitely. And the Brazil analysis just hammers home how tightly politics and economics are intertwined, especially in emerging markets. You really need to understand the history, the players, the context to navigate it all.
Absolutely. We saw so many contrasting ideas today. Limited government versus strong central power, market optimism versus deep economic worries.
Yeah, the tension is always there.
So, thinking about all this, that tension between common sense, as Chesterton and Paine might see it, and the sheer complexity of today's world. What do you think is the most vital thing for ensuring both liberty and prosperity going forward? It's a big question to leave people with.
It really is. Finding that balance between individual freedom, effective government, and sound economics, that's the ongoing challenge, isn't it? No easy answers.
Definitely food for thought. The topics today were so rich, we really hope you, the listener, will maybe go back to the sources, dig deeper into what caught your interest.
Yeah, research the history, the economic indicators, the global situations. There's always more to explore.
Thank you for taking this deep dive with us. We look forward to our next exploration together.